In today's video, I bring you the strategy that you have to know yes or yes if you are a beginner. This strategy uses the macd indicator and the parabolic SAR in its most basic form, plus an exponential moving average, ema, and it can be used on any time frame and any type of financial asset. In my case, I'm going to be using it on the euro-dollar on the 1-hour chart. It is a really simple strategy. All we have to do is select the parabolic SAR and leave the default values. Then we have to select the macd and also leave the default values. We will only deactivate the histogram to clean up the chart a bit. We will change the color of the macd line to white, and we will put the signal line in red. In case you did not know, the macd moving average convergence divergence measures the divergence and convergence of the price of an asset in a market, allowing us to analyze the behavior of the price and the market trend. The macd is made up of two lines and a histogram. The first is the macd line. It is a measure of how two moving averages come together and move apart. By subtracting the position of these two averages, you get the main macd line. macd formula is equals to ema, number of periods, minus ema, number of periods. The second line is the signal line. It is nothing more than an exponential moving average of the first line, almost always 9 periods, and which will intersect every so often with the main line. Then we have the macd histogram, which just measures the distance between the two macd curves. If the bars are above 0, so the uptrend will most likely continue. On the other hand, if it is below 0, it means that the bears rule. In short, we have two moving averages, we subtract them, and we get a line. To that line we calculate another moving average, and we obtain a second line. If we subtract both lines, we have the histogram. When the macd line crosses the signal line from the bottom up, it could be a buy signal. And when the macd line crosses the signal line from top to bottom, it could be a sell signal. Of course, the macd indicator can be used in many other ways. In addition, we will select an exponential moving average, ema. We will put it in 100 periods, in an hourly chart higher than the one we are operating. As I will operate in the 1-hour chart, I will put this EMA in the 4-hour chart. We will change the color to red, and we will increase the thickness to the maximum. This EMA will serve as a filter, that is, if the price is below the EMA, we will only carry out sell operations, and if the price is above the EMA, we will only carry out buy operations. To carry out buy operations, we simply have to wait for the price to be above the EMA, and the white line of the macd crosses the red line from bottom to top. If this is true, we will see that the parabolic SAR shows points below the price. If this is also true, we will carry out the buy operation. We will place the stop loss below the last low and the take profit in the support and resistance zones with a minimum risk-benefit ratio of 1:1. To carry out sell operations, we will simply have to wait for the price to be below the EMA and the white line of the macd crosses the red line from top to bottom. If this is true, we will see that the parabolic SAR shows points above the price. If this is also true, we will carry out the sell operation. We will place the stop loss above the last maximum and the take profit in the support and resistance zones with a minimum risk-benefit ratio of 1:1. Let's show some more examples. and ready. I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.